Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
All right, so our stock of the day is usually a stock that's in the news. Certainly Collins Foods was in the news this morning. It has lowered its FY25 earnings guidance due to a challenging consumer environment. The owner of KFC and Taco Bell has also cut its first half dividend. Collins Foods reported a 6.6% drop in first half underlying earnings, while underlying net profit after tax also fell 24%. Shareholders will receive a fully franked interim dividend of 11 cents a share. That's down from 12.5 cents in the last half. Looking ahead, Collins Foods says consumer spending conditions and inflation will weigh on margins in FY25. Tell that to the Treasurer. But Collins Foods down about 3% today. Shawn, what did you think of the update and Collins Foods at these levels?
I've just heard the update for the first time, so
Right.
thank you very much for that. There's nothing very exciting in those numbers. I'm surprised they're quite so bad. My son loves KFC, but one of our family does. It was interesting the other day that Goldman Sachs came out and said they like the idea of switching from Guzman into Collins Foods.
Oh.
Now that's looking a lot more attractive today. Doesn't mean it's right. I've still got Collins Foods. Obviously, it's very fresh to me. I've literally only heard that feedback. We just got it in the hold basket.
Right.
It's not attractive to us. We don't see any reason to go in there. It's quite a mature business. It doesn't really do it for us. I don't see any. There's better places to put your money.
Okay.
You know,
So
I'd call it a hold, a neutral.
a hold, but what about in the sector overall? Because, we've actually got Guzman y Gomez coming up a bit later in the show, but there's Domino's as well. Are any of them attractive?
Overseas, yes. I've got notes down to talk about a stock. Overseas, we prefer, but not
Are you
locally.
following Warren Buffett?
No, I'm not.
Because he bought a big stake in Domino's in the US, didn't he?
Yes.
In the last 2 or 3 weeks. Interesting. So a hold for Collins Food. Rudi, what do you think?
I share the sentiment that even in the past I've always been very lukewarm on Collins. I would actually think there's a broader basket. I would include Coles and Woolies and Endeavour Group as a defensives basket, and I think we can all agree on that. Defensive companies are doing it tough.
Right.
I mean, they're operating on not too high margins anyway. Top line is not growing. Everyone who has a little bit of a budget is looking for the best bang for their buck, and clearly that doesn't include too much KFCs out there. I personally, I wouldn't be too negative about any of those companies. I don't think we're all going for beetroot and celery sticks eternally or indefinitely.
Food inflation has slowed, hasn't it? Which hit them. Wage rises hit them too.
The thing is, yes.
increases.
So the pressure has to taper off. The fact that inflation is lower doesn't really help us because the prices are still high, right?
Yeah.
So I think if you're in there, there's probably not a particular reason why you should sell.
Right.
A day like today, the result is it's not that it comes out of nowhere that the results are lower. They're probably a little bit lower than forecasts, and that's basically what happens on the day. It's compared to what the forecasts were.
Yeah.
But that doesn't mean that in 12 months' time, in 2 years' time, the share price can't go high. It's not excessively priced, which I assume that's why Goldman Sachs' preference comes in. It's a value thing.
Yeah.
But then again, I mean, as the market has shown now time and again, the better or the cheaper valued stock doesn't necessarily perform.
Yeah.
There's probably a reason why it's cheap. So I agree with the sentiment. I don't think it's spectacular. I don't think we should expect anything spectacular to happen anytime soon. But the shares are, I mean, they're sort of like relatively cheaply priced. I mean, you get a dividend.
Paying a dividend.
You get a dividend.
Fully franked. Yeah.
So it's not a disaster. So is the screaming buy? No, it's not. Is this maybe a stronghold? Maybe a stronghold.
Okay. All right. Okay.
I've never heard of stronghold before.
What about the theory though? Do you get caught up in the theory when there's a stock that's running and a sector that's running, everyone goes, oh, we're going to look at the laggard because investors will turn their attention to the ugly duckling and then it's got to be swept up late.
Once or twice I've done that, and I think I've generally lost money doing it.
Right.
Yeah.
I just don't think it's a smart. I don't think
about
it's a
to
smart
say.
way to go. A few
about
times
to
you
say.
get a bit of a move, bit of a whip into the end of calendar year, the end of financial year.
Yeah.
It's not a natural flow of money. But this year we've seen those valuation elastic bands, which Rudi alluded to. They've just stretched and stretched and stretched.
Yeah.
And every time you've looked for the laggards, you've been caught.
Yeah. Rudi, do you get caught up in that at all? Is
No,
that a
well, no.
theory?
See, my observation is similar. That's often what stockbrokers like to do. I mean, you go to the laggard because it's cheaper, but what they often find out, outside of the short-term catch-up, which sometimes happens, there's a reason why they're the laggards. I mean, and in most sectors, I tend to go for the stronger one and for the one who performs and keeps performing.
And in uncertain times, usually it's a market leader that is there for a reason.
Yes,
isn't it? You
exactly,
Just, you
exactly.
Just stick with it. Yeah.
But what investors more often than not discover is that there's a reason why there is a valuation gap.
Yeah.
The cheaper one is simply not that good.
Yeah. Okay. All right. Collins Foods. That's our stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.